Hello everyone, in this video we're going to analyze the Ethereum chart and the review will be very brief but very high quality. We'll start with the monthly candles. Look at the chart. First, without any markup, what do we see? The green 50-month average has been tested many times. And finally we broke it and stopped our fall at the red 100-month one. Well, we fell just a little bit short of it. And now let's take a look at the markup I gave in the previous review. It was based exactly on the monthly candles. I said that every time we got a bearish engulfing, we got a deeper decline in the end. Notice that right here, we had a growth candle in August 2025. We couldn't engulf it in September or in October. And finally, in November 2025, we saw the engulfing. I was saying that the next technical targets for the decline are the base of last July's candle and last May's candle. We've hit both the first and the second levels. If you can't see it, I'll zoom in. Here you go. The candle shadow hit this level exactly. What can we see and what can we count on right now? We can expect a correction towards the 50-month moving average and towards that same level of $24.85, which was our previous target. So it's all very simple. A correction towards $24.85 is likely, simply because that's how the market works technically. We've reached all the basic targets, and testing the strength of a previously broken level is quite logical. But this is just a guess, because we don't see any clear signs of growth here on the monthly candles. There are technical prerequisites here, but nothing more. Now let's remove the markup and look at the weekly candles. What do we see here? The picture here is also interesting. Notice that right here, Ethereum breaks through the 50-week, 100-week, 200-week, and 300-week and goes significantly lower, after which it breaks all these averages in the opposite direction. So a Bitcoin rise at least to the nearest averages it broke straight through is expected. That's the 300-week area of $23.30. And at least the 200-week, as it's more classic. Few look at the 300-week. That's the area of $24.40. And if we close this week engulfing, look, 4 red weeks of decline, then the chances of a rise to $2,300 or $2,400 increase greatly. I wouldn't talk about anything more yet. But there's one important point here. The engulfing of these 4 weeks of decline is not enough on its own to talk about a full-scale growth, because none of these weeks updated the local minimum. The week of February 2nd did that. And only engulfing this week will signal a trend change on the Ethereum chart, on the weekly chart. But a different situation could occur. We might see a test of the 200-week average followed by a deep pullback. Nevertheless, it looks like growth into the $2,300 to $2,400 range. On Ethereum's daily candles, just like Bitcoin, we have a sideways trend. Let's mark its boundaries. Let's turn on our monthly candle markings, but we won't pay attention to them. And what do we see? This big red candle, also from February 5th, just like with Bitcoin, that hasn't been engulfed. If we see Ethereum close above the $2,148.25 level, that will be a formal signal for a trend change. Right now, for the first time in quite a while, we've approached the 50-day moving average. And until it's broken, until the $2,148.25 level is broken, we don't have the right to talk about growth. Because it's possible that we will stay here for a while and then go back to test the lower boundary of this range. This could go on for quite some time. But nevertheless, the prerequisites, we're on the edge at the decision point. These prerequisites are there. And if this growth continues, where is the movement headed? Somewhere around here, into the area of the 100-day moving average. And that's still the same $2,400. Subscribe to the channel if you find this content useful. Until next time, goodbye.